and we're joined by Mr. Kunal Rai, who's the Director and CFO at Kross Limited, who joins us now. Welcome to the show, Mr. Rai. Overall, if we see your financial performance in the past 3 years, the kind of growth that you've seen is extremely, impressive. But Q1 somehow has remained muted. Revenue growth was only 2%, and net profit was down around 4%. So I want to understand as to, how has Q1 performance overall been like, and how is FY25 shaping up?
Hi, good morning. So the last 3 years have been good. We've seen a CAGR of around 44%. But Q1 has been, you could say, muted. But if you compare it to Q1 of the last financial year, we've seen a 2% growth. And the M&HCV segment, in H2 should be performing better. Not to forget, we had elections during the first quarter, and the impact of elections were there probably on the infrastructural activities, and there were a lot of apprehensions. So H2 should be better than the H1.
Namaste, Rai. Good morning, and thank you so much for joining us today. Firstly, many congratulations on listing, and this is your first conversation post-listing as well. So many congratulations for that. I just wanted to take a step back from Q1, because you have mentioned that the first half has been very subdued for M&HCV as well as the tractor segment. So that will affect you as well, and H2 is what you are targeting for a better recovery. I just wanted to understand the current split between the commercial vehicle segment and the tractor segment for you, because the kind of components that you supply to the M&HCV side is much higher, and please correct me if I'm wrong, compared to the tractor segment. So what is the current split between them, and is margin also largely stable between the 10 to 12% for both these segments?
Yes, so the margins are quite same if we compare it to the M&HCV component business and the tractor business. The tractor business in H1 is doing well. Till the time the rains are there up to Diwali, the tractor OEMs are performing well. However, the M&HCV segment has seen a bit of a slowdown and degrowth in volume, especially in the month of July and August. But as far as our revenue split is concerned, within the M&HCV sector, we are also there in the trailer segment. That is with the tractor trailers, manufacturing trailer axles and suspensions. And what is happening in the industry is that there is a huge shift happening towards higher tonnage vehicles. The OEMs are seeing a requirement which is growing for higher tonnage vehicles, that is 40 tons and above. And that's where the volumes are increasing. And on the revenue split, we are still at around 44% of our revenue coming in from the trailer segment and close to 9-10% from the tractor segment. The balance is with the M&HCV OEMs and the large Tier 1 companies in our component business.
Right. So take your point, H1 likely slow. How strong is H2 going to be, and how strong will FY25 full year be? Can you do 25% plus on your top line for FY24?
See, as far as FY24 was concerned, the M&HCV segment didn't see any growth as such again. But our tractor trailer segment grew by around 38%, and we saw growth of 27%. So even if there is no growth in this year, we'll still try to be doing better than what the last year has been. And H2, yes, the numbers which are being indicated are better from the OEMs, but we'll have to wait and watch how it pans out in the next 6 months of the year.
Sorry, so slightly softer guidance coming in. Want to understand, will it be double digit at all in FY25? Is that something that one can expect?
In the industry?
For you in particular.
As I said, yes, we would be trying to do a double digit growth. But also it depends on how the balance 6 months goes with the M&HCV segment, the tractor segment. The trailer segment, we are already doing well in it. As I said, is constituting 44% of the total top line. And our focus is towards the exports as well, with the customers in Sweden and in Japan. Things have kicked off there. We're doing mass production for these two customers as well. And we're focusing on our projects. We're looking into getting into the axle beam extrusion
Right.
soon. That would benefit our top line and margins as well.
Right. So, Mr. Rai, as of now, your manufacturing capacity stands at roughly 60,000 trailer axles and suspension. I want to understand what is the capacity utilization like right now, and by the end of FY25, where will it be at?
So on the capacity utilizations, we are at approximately 70%. Okay, and we plan to be getting into the axle beam extrusion by this year end, and that would take our capacities even higher for our trailer axle manufacturing. As far as the capacity utilizations are concerned, we really split it into two. We're investing in our forgings. We're getting a couple of forging presses as well from the IPO proceeds. And we already are in manufacturing castings as well. And we're setting up a new line in the foundry as well. So from the forging and casting point of view, we're looking at utilizations of around 65%. Machining, it's at around 72%.
Now, just a couple of questions, Mr. Rai, on firstly your manufacturing facilities. Now, you have all 5 of your manufacturing facilities in Jamshedpur itself, and we did speak about this in your pre-IPO conversation as well. How are you effectively competing with most players, especially in the southern market? Because we have seen that, while players in the northern market have been doing well, but the tractor segment has been doing well much better in the western part of the country. So just wanted to understand that you also are investing in a new plant with the IPO proceeds. What is the future plan to diversify away from, the concentration of manufacturing plants in one part of the country as well? And how are you dealing with competition basis on this part?
So, since the beginning, we've concentrated on all the manufacturing being at one location, that is in Jamshedpur. Now, having a different forging setup and a casting setup, these are all, very high asset valued, and it cannot be at different places of the country. So we've basically got everything integrated at one place. Also, what helps us in being competitive is being backward integrated. We set up our casting unit in 2022 only to manufacture brake drums and hubs for our trailer axles segment. So we are competitive because we've got everything in-house, from machining and heat treatment and castings and forging. So diversification of plants is not going to be happening out of the city.
Right.
It's that we've got warehouses close to our customers to serve them with deliveries.
Right. Mr. Rai, your top 5 customers right now contribute roughly 66% to your total revenue. So I want to understand that how are you planning to diversify your customer base, because this could be a bit risky, top 5 customers, contributing almost 66% to your revenues.
So it's not that we have a very large plan to change that. We look at not that as a risk, but it's only opportunities. All these OEMs and big, large Tier 1 companies, we've been associated with them for many, many years. Okay, it's been more than 20-25 years that we've been associated with them. And in our top 5 customer lists, it's not that there's only somebody from the M&HCV segment. We've got tractor OEM in that. We've got M&HCV companies in that. And we also have trailer axle and suspension fabricators, trailer fabricators in that top 5 customer list. So we're quite diversified as far as our client base is concerned. Our top customers is just at 19-20% of our total top line. So we're not looking it as a threat from there. But going forward, we want to expand on our exports.
Sure. Thank you so much. It's been a pleasure speaking, understanding Kross Limited better.